What are we looking for here? Number one, we have a bullish potential breakout. And again, we're waiting to see, does it confirm to really solidify? If it confirms a breakout on silver here, then you're likely headed to $48 to $50. Might be a small pullback in at around 44 to 44 and a half on the price of silver.
Gold is really barely up over the last 4 months because we just barely took out the high. But during that time period, gold stocks were almost up 30%. Get about a 30% move in gold stocks as gold itself was going sideways. Well, now gold is broken out, and I expect another big up move. And if gold stocks were this strong with gold going sideways, imagine how much stronger they're going to be when gold resumes its uptrend.
Silver's recent surge above a critical long-term trend line has sparked widespread attention among traders, with many now eyeing the possibility of a sustained breakout toward the $48 to $50 range. Gareth Soloway has highlighted how repeated tests of this resistance since early 2023 ultimately weakened the line, allowing silver to finally break through with convincing momentum. This development is not just a technical milestone, but also a signal that silver may be entering a melt-up phase after years of lagging behind gold. While confirmation is still necessary to solidify the move, the technical setup suggests that silver could be preparing for a powerful leg higher, fueled by both strong chart patterns and supportive fundamentals. Looking deeper into the charts, silver's trajectory reveals a familiar rhythm of consolidation, followed by breakout moves, a pattern that has historically led to significant rallies. Previous instances, such as the surge from $11 in the wake of the COVID-19 crisis to nearly $30 in mid-2020, showcase silver's ability to deliver explosive upside once technical barriers are cleared. The current setup mirrors those past conditions, with consistent rejections along the trend line now giving way to upward momentum. If the price holds above key support levels and successfully confirms the breakout with sustained higher closes, the path of least resistance points directly toward the $48 to $50 zone, a range that has acted as a ceiling since the 1980 and 2011 peaks. Beyond the charts, the broader macro backdrop continues to favor silver. Gold has already doubled in recent years, but silver has remained relatively underpriced in comparison, leaving room for catch-up potential. Moreover, its unique role as both an industrial and monetary metal amplifies demand drivers, from green energy expansion to heightened investor interest amid global uncertainty. As Soloway emphasizes, silver's breakout is not just about a short-term price move, but also about positioning for the next major wave in the commodities cycle. If momentum continues, silver could outperform gold in the near term, while setting the stage for broader opportunities across other undervalued metals. Before we dive into PeterSchiff and Gareth's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Here's your daily candle on silver today. And again, beautiful push to the upside, trading just below $41 per ounce. Now, the kicker here is this, folks. There was this longer-term upsloping trend line, right? And again, this trend line goes all the way back to January of 2023. And what we could see here is that over and over, silver would tag this trend line and get rejected, right? So again, just going through this, you had the high point here in January of 2023, the next high in April 2023, the next high in May of 2024, and the next high in October of 2024, right? So 1, 2, 3, 4 hits of this trend line. Then you touched it briefly in mid-July and then late July, each time getting rejected. But this time is different. Now, one of the key principles of technical analysis that I teach is that the more you hit a trend line, the more likely you break through it. In other words, the more hits on a trend line, the weaker it becomes. And so what we know is if price keeps hammering and hammering and hammering on the trend line, it will eventually, at least probability-wise, strongly favor a break out or down. In this case, out, right? Because it's an upsloping trend line, price hammering on it from the underbelly. And that could be what has happened here. Finally hit it enough where we're getting a push through. Now, I say could be because I would really like to see confirmation. The trickier thing here is that upsloping trend lines are a little harder to maintain the breakout on. And so for me, for sure, I want to see not just a daily close above, but also a confirming candle. And confirmation, the confirmation signal, essentially simplifying it down, means that we have a secondary higher close than the high of the first candle breakout. And the idea there is it's very hard to fake out price when you get two consecutive higher closes on a price or on a chart. All right, so this is a very good sign for silver that it may be breaking forward. The key here is looking at the bigger time frame to see where this could head up. And I just went to the weekly chart. And we can see here, by the way, look at the beauty of this chart on silver. This was a classic bullish consolidation period right here. And look at that. I mean, this is just absolutely gorgeous. All right. So we're going to, I wasn't intending to break this down and do more teaching, but let's get right into it. So you had this big bull move on silver from $11 at the COVID low, essentially 11.75, all the way up to in August of 2020. So just over a year, silver went to about $30 per ounce. And you can see that monster move, COVID low, August 2020, right? So what did we see after that? And by the way, it wasn't quite a year. That was only about 1 month, 2 months. Yeah, basically 2 months period, right? But the idea here is that you got a bullish consolidation period here. And look at how it was a perfect parallel. You can see here, down sloping trend line hits there, and finally hits here, pulls back, and breaks out. And then notice the beauty of how charts work. A resistance level, once it's broken, right, breaks out here. What does this line become? It becomes technical support. And look at how it hammers over and over again, creating, again, you've broken out. It's trying to break below, but it can't. And then eventually what's path of least resistance to the upside. And look at how the lows align perfectly with that parallel as well. And same sort of deal here. 1, 2, 3, 4, 5, 6. Boom, breaks out on the 7th hit, consolidates, and goes higher right there. Okay, so same sort of principle. The more hits on a trend line, in this case, a downsloping trend line is even more ideal than an upsloping because, again, inevitably this line keeps going down. So it really favors the breakout and the continuation move, which is what we've seen. But that wasn't really what I was going for showing you here. It's just something that popped out on the chart. The other thing here is what we want to do is just very clearly see that you're now in this kind of melt up phase in silver. And silver does have a small resistance around 44.25 right here. Again, I don't know if you guys can see this, but basically it's your prior high to your $50 hit. Okay, so there will be a little bit of minor resistance here. If we were to go to straight to 44, $44, $44.50 or so, I would expect a quick pullback or consolidation, and then one final push up taking us to this $48 to $50 upside level. And the reason I say this is a key level on silver is because if we go to the monthly chart now and we zoom out even more so, and we can see right here, and again, look at this, guys. I mean, just remarkable on the chart. But this is the 1980 high was at $48. The 2011 high was at just under $50. And so that's where I'm getting my $48 to $50 upside target is very simple, just taking that range, and I'll put in we'll take a trend line here and we can drag it up. So this now becomes the range of where you're expecting ultimately silver to go. Okay? So again, silver has lagged gold for quite some time. Arguably, silver is now in the lead. And that makes me, again, near term thinking it's going to play catch up to gold to the upside. All right. So gold, as we know, has gone up from, 2,000 to 3,500, almost 100% in just really the last year or two. Silver has lagged its historical comparison or comp to gold. And again, the idea is it is now getting close to this melt up period here. And you can see that same trend line we were talking about earlier on. But now we can extend this out. It has its eyes set on this level here. All right. So again, what are we looking for here? Number one, we have a bullish potential breakout. And again, we're waiting to see, does it confirm to really solidify? If it confirms a breakout on silver here, then you're likely headed to $48 to $50. Might be a small pullback in at around 44 to 44 and a half on the price of silver. This is a pretty remarkable kind of thought process chart. And the reason why I like it is it tells us something about these industrial metals that have lagged gold. If silver is doing this, what do we think palladium and platinum could be setting up to do as well? Another opportunity possibly for a long trade. So very, very key here to monitor. Again, gold is trading higher at the same time as I'm doing this on silver, but gold has not broken its all-time high yet, although it is borderline. But again, silver's obviously pushing up stronger relative in just the near term. I mean, listen, silver's still lagging longer term, which gives us that opportunity for upside, right? And continuation. But near term, silver has now really shown that it's breaking its recent highs substantially, and it's been trending with making higher highs, while gold for really the last 3-4 months has been just chopping sideways, which by the way is bullish on gold too, don't get me wrong.
Gold's recent price action highlights just how powerful this rally has become, and PeterSchiff emphasizes that the metal's resilience is a sign of something much larger unfolding beneath the surface. After surging past the $3,000 mark earlier this year, many expected a sharp correction, yet instead of rolling over, gold chose to consolidate. This kind of sideways trading at elevated levels isn't weakness, it's strength, as it shows buyers stepping in to absorb every ounce of supply without letting prices meaningfully retreat. Now, with gold climbing beyond $3,400, the lack of any significant pullbacks suggests that investors are willing to chase prices higher, a clear indicator of robust demand. Each surge is being met not with profit-taking, but with fresh inflows, which only adds to the bullish case. Fueling this rally further is the pronounced weakness of the US dollar, which has lost nearly 8% of its value in just 1 year. For the world's reserve currency, such a move is seismic, and it immediately changes the global appetite for alternatives like gold. Because gold is priced in dollars, every tick lower in the greenback makes the metal cheaper and more appealing for international buyers, creating a tailwind that adds force to the rally. What looked like a temporary cyclical pullback in the dollar now appears to be morphing into a structural bear market, a scenario historically aligned with massive bull runs in gold. To put this in perspective, an 8% decline in the dollar is equivalent to a far larger shock in more volatile assets, meaning the financial system is already under more pressure than it seems.
People are walking away from the dollar. By next year, if we go back to QE, they'll be running for the dollar as fast as they can. And so that's why, you don't want to wait, right? Read the writing that's on the wall, right? Newmont Mining isn't going to be the number one performing gold stock stock in the S&P by accident. When precious metals stocks are the number one performing stocks, certainly there's no sector that's beating precious metals this year. That's not a good thing, right? It's not a healthy market when precious metals are the leading sector. And, it's getting no coverage, too. That's one of the things. If you watch the PeterSchiff podcast, yeah, you know about the gold stocks. I've been talking about them for years now. But the mainstream financial media, they're not even talking about them now. They barely talked about them yesterday as they're making new highs. They barely talked about gold as gold was making all-time record highs. I still remember when I went on CNBC back when they still had me on. I hadn't been on like 10 years. I don't know. I can't remember when I was on. But when I used to be on every week, but when I first started going on, I was on Squawk Box, and the host was this guy, Mark Haynes, who passed away quite some time ago now. But the first time I was on, of course, I discussed the price of gold, and I think it was still below 300, or maybe it was in the low 300s. I forget. But I came back, I don't know, a few weeks later, and I'm in the studio again talking to Mark Haynes. And I said, Mark, gold's up about $40 since the last time I was in this studio. And his response to me was, who cares? Who cares about the price of gold? And, he mentioned a number of things where he cares about the price. But he says, I forget, maybe it was bread or oil, I forget. But he said, why should I care about the price of gold? Right? He is the anchor in a financial news show. It's supposed to be focusing on finance, investing, economics. And he says, who cares about the price of gold? I mean, how could you not care about the price of gold? Only if you just don't understand what gold is. I mean, gold is money. It's, you're a show about money. How could you not care about gold? And when the price of gold is going up, especially like this, it is a warning. It is telling you that there's a problem, right? I mean, even Alan Greenspan, I talked about this, he used to use gold as his primary reference to know whether or not he was too loose or too tight. He used to say that if gold gets up near 400, I'm too loose. If it goes below 300, I'm too tight. Now, what does that say? Look where we are now, 34.50. We've been too loose for decades based on Greenspan's metric. But no, gold is the most important price. It's not just a precious metal. It's not just a commodity. It's a monetary metal. Central banks are holding gold for a reason, right? How could you say, oh, I don't care about the price of gold? Well, what about all these central banks that are hoarding all this gold? Don't you think that's significant? Because, they're not stockpiling other commodities. They're owning gold for a reason. It is the single most important price out there. And right now it is screaming that there is a huge problem. There is something rotten in the state of America. And that's what you're seeing in the gold market. And, I'm sure that mentality still exists today. The same one that Mark Haynes had, even though he's not around anymore. I think that idea that who cares about the price of gold, right? What's the big deal? It's nothing, right? It's just a rock, right? They care a lot more about Bitcoin than they do about gold. But if you understand what gold is saying, it is a warning. And it's a warning that you had better heed and that you better react to. You better get out of dollars. You better get into gold and silver. That's what the central banks are doing, right? Follow their lead, right? They ought to know. They're like the insiders in the fiat money system, right? So if you see in a company, if all the managers are dumping their shares, they might know something that you don't. Well, this is basically what's happening. The managers of the fiat monetary system are dumping their dollars. They want out. And they're buying gold. They're not buying other currencies. They don't want another fiat currency. They want real money. You should do the same thing. And the same thing is happening with investors. Not necessarily in gold, but they're dumping their U.S. shares and they're buying back their own stock. Right? That's why, my dividend payers fund is almost up 40% on the year now. It's at 39%. It's on the high of the year because value international dividend paying stocks, that's where people are putting their money now. That's where when they sell in their U.S. stocks and they sell their dollars, they're bringing their money home and they're buying value. They're buying income, right? They're buying these dividend paying stocks. I think we're still early in this trend. So again, you want to go to the Europe Pacific website, Europac.com, and talk to my representatives about how we can help build a portfolio for you, manage a portfolio of foreign stocks, value and dividend paying stocks. And we also have portfolios where we manage in gold mining stocks, which, we're early in this bull market. I think we're just starting the second leg, right? The first leg was just a pure wall of worry. Nobody was investing. Everybody was scared. Everybody thought gold was about to crash. So nobody wanted to buy gold mining stocks because no one believed in the rally. I think now you're getting institutions finally starting to recognize that the rally was real, that gold prices aren't going to crash, that maybe $3,400 gold is the price. And that means gold mining stocks are way too cheap because they're priced for much lower gold prices because everybody expected gold to collapse. But eventually, not only are investors going to realize that gold's not going to crash, but that it's going much higher. And that's when you're really going to start to see the bids coming into these gold stocks. Gold is really barely up over the last 4 months because we just barely took out the high. But during that time period, gold stocks are almost up 30%. Get about a 30% move in gold stocks as gold itself was going sideways. Well, now gold is broken out, and I expect another big up move. And if gold stocks were this strong with gold going sideways, imagine how much stronger they're going to be when gold resumes its uptrend. Right? So I think that by the end of the year, we could be up well over 100% on the GDX for the year. We still have a lot of time left in 2025, and this is already, the best year that these gold stocks have had, probably since the 1970s, I guess. But there wasn't a GDX back then, so it's probably the best year in the history of that ETF, right? And if all the ETFs, it probably gets the least amount of coverage.
Looking ahead, silver appears primed for a breakout that could surprise even seasoned market watchers, as its unique position straddling both the precious metals and industrial sectors gives it an edge in a rapidly changing economy. While economic slowdowns can temporarily weigh on its industrial side, the accelerating push toward renewable energy, electrification, and advanced technologies means silver demand is set to expand far beyond traditional investment flows. Unlike gold, central banks don't buy silver, but that gap is increasingly offset by soaring usage in solar panels, electric vehicles, and medical applications, sectors that aren't slowing down anytime soon. With investment demand expected to spike as uncertainty deepens, silver could easily push well past the $40 mark and establish a new era where its performance doesn't just mirror gold, but carves out its own explosive trajectory, making it one of the most bullish opportunities in the metals market over the coming years. That's it for today. If this video provided value, please like, share, and comment below with your thoughts. Your perspective helps deepen the conversation and keeps everyone informed.